Join me as I challenge myself to master Fibonacci retracement and see if it really can lead to trading success. In this video, we'll explore Fibonacci retracement, a technique used by traders to predict potential price reversals and identify key support and resistance levels. Many traders struggle with identifying when to enter or exit a trade. The challenge lies in determining key levels where price may reverse, and that's where Fibonacci retracement comes in. One of the main reasons traders struggle is because they're not using a clear and concise method to identify these levels. Traditional methods often involve guessing or using arbitrary numbers, which can lead to inconsistent results. By using Fibonacci retracement, you can eliminate the guesswork and focus on high-probability trading opportunities. Additionally, many traders are unsure of how to combine Fibonacci levels with other indicators, which can lead to confusion and uncertainty. By understanding how to effectively use Fibonacci retracement, you can gain a deeper understanding of market dynamics and make more informed trading decisions. Another common issue is that traders often don't know how to adapt Fibonacci levels to different market conditions, which can lead to losses and frustration. By mastering Fibonacci retracement, you can develop a more nuanced understanding of market trends and patterns. We'll break down how to draw Fibonacci retracement levels, the significance of each level, and how to effectively use these tools in your trading strategy to enhance your decision-making. To start, it's essential to understand that Fibonacci retracement is based on the idea that prices tend to retrace a portion of their previous move before continuing in the original direction. This is because Fibonacci ratios such as 23.6%, 38.2%, and 61.8% are derived from the Fibonacci sequence, a mathematical concept that appears in nature and financial markets. By applying these ratios to your charts, you can identify potential areas of support and resistance and make more accurate trading decisions. For example, if you're looking to enter a long trade, you can use the 38.2% Fibonacci level as a potential area of support to enter your trade. Similarly, if you're looking to enter a short trade, you can use the 61.8% Fibonacci level as a potential area of resistance to enter your trade. By understanding how to apply Fibonacci retracement levels, you can gain a deeper understanding of market dynamics and make more informed trading decisions. When it comes to using Fibonacci retracement in your trading strategy, it's essential to understand the significance of each level. The 23.6% level is often used as a minor support or resistance level, while the 38.2% level is used as a moderate support or resistance level. The 61.8% level is often used as a major support or resistance level and can be a powerful tool for identifying key areas of support and resistance. By understanding the significance of each level, you can use Fibonacci retracement to identify high-probability trading opportunities and make more accurate trading decisions. The key insight here is understanding how to combine Fibonacci levels with other indicators, which can drastically improve your trading accuracy and confidence. One of the most effective ways to do this is by using Fibonacci levels in conjunction with other technical indicators, such as moving averages or oscillators. By combining these tools, you can gain a deeper understanding of market dynamics and make more informed trading decisions. For example, you can use a moving average to identify the trend, and then use Fibonacci levels to identify potential areas of support and resistance. By combining these tools, you can gain a deeper understanding of market dynamics and make more accurate trading decisions. To recap, we've covered the basics of Fibonacci retracement, its importance in trading, and how you can start applying it to your strategies for better results. If you found this video helpful, be sure to check out our next video on advanced trading techniques and let us know your thoughts in the comments below.